Wells Fargo thinks the Tesla bear case is intact despite that delivery beat. Colin Langan is the firm's senior equity analyst. Colin has an underweight rating, a $120 price target on Tesla stock. Nothing has improved in your view based on this?
I mean, based on today, I mean, deliveries are still down year over year. So, you know, we had a much lower number for the quarter, so it was a better quarter. How did they get there? Giant financial incentives. You could get the part for a week and a half, you could get 1% financing. That's about $100 in your payment per month. It's a very generous deal, probably over $5,000 in incentives. You know, if this is nothing techie at it at all based on, you know, what Phil was saying. I mean, this is a traditional auto story. This is cut the price, drive volume. This is our concern. This is the reason why we originally downgraded, because we're seeing the price cuts are not driving volume. Now we have both negative pricing and negative volume. How are we going to grow deliveries into the second half? Numbers still have to come down. And Q2, that's going to be a problem, because if pricing is down, margins are going to be poor.
I thought it was interesting, too, when you take a look at the countries that had subsidies for EVs versus the countries that pulled them back. There was a difference in deliveries. So in the countries where there were EVs, like a Turkey or in Italy, you know, it was up. And then in the countries that pulled back, like France and Germany, some of the more core markets, deliveries were down. So it really is. I mean, it's like a typical story. You get the incentive there, whether it be them buying down a rate or an EV incentive because the government's giving it to you, and you got the sales.
I mean, it's absolutely concerning. Yeah, you see markets like Germany and France down large double digits year over year because of the incentives. And in fairness, there's some pull forward factors. But yeah, once you pull the incentives back, volumes start to collapse, really.
So one of the bullish points that people make is FSD. When do you think that will happen? Do you think it will be the gigantic top line and the margins on it would be tremendous? When or ever do you think that will happen?
Well, full self-driving, I mean, there's a little bit of help in the quarter from the release of the full self-driving sort of prototype or demo, and some people might adopt it, and there's a little pricing up. I think it's going to be pretty small. I think if you're talking true full self-driving robotaxi, we're going to get the reveal on 8/8. I think, typically I actually also take the contrary point here. You get the hype into the reveal. You were talking earlier about all the hype and all of what's probably going to come. And typically it actually falls after that, because then there's this realization it's going to take long. And when I talk to experts, people are very skeptical of a vision-only approach. How do you deal with fog? How do you deal with glare? I think if you look at a lot of things, you go back to like Waymo and Cruise, they were supposed to deliver full self-driving 5 years ago. But what happens is you get so hyped about the technology, you don't realize getting to that last 1% is a lot harder. I think that's partly what's going to happen here to Tesla. There's all this hype, all this excitement about robotaxi, but it's probably going to prove to be a lot harder to get to. And so I think once you get this, 8/8 reveal, what's the next catalyst? We already got a lot of hype into it. So typically it often fades.
By the way, full self-driving is called supervised full self-driving, right? Isn't that what the regulators are saying that it needs to be called? And the other point is like it's low single digits of Tesla owners who've actually taken up full self-driving. So it's interesting. They're going to have some real technological advances for large numbers to do that. My question to you, though, after my little thing.
Monologue.
Yeah. Well, we call it a soliloquy.
It happened already,
if we were sophisticated.
Go ahead.
A lot of your competitors, it's interesting. They say it's not a car company. Well, the move that it just had over the last couple of days is, because it's a car company, right? And so how do you think about that a little bit? Because people are talking about Optimus, they're talking about FSD and all these advances and robotaxi. That seems to be a big part of the bull case.
Well, I wouldn't really say that the move the last couple of days is, because of the delivery. I mean, it is deliveries, but, if GM beat a little bit, would they be up? I mean, if volumes were down.
No, my point is, it's a $700 billion market cap company, and very little of it has to do, at least a lot of your competitors are suggesting, about the sales of these cars right now. It has to do with all this other stuff.
Plus, I mean, it's obviously true, right? I mean, it trades at 90 times earnings. I think my problem is that you're betting so much, on the value of robotaxi, and it probably has a pretty low probability of being a true success. And the core business, by the way, is deteriorating. And by the way, the Chinese competition are coming in and actually doing really good cars. I was out in Detroit at a teardown facility a couple weeks ago. I mean, it's amazing with the technology that China's bringing in. The leaders are not really, Tesla's really not necessarily the leader anymore. It might be the Chinese companies, the EV makers there, like BYD.